Legendary investor Peter Lynch once said to invest in what you know, a mantra that Warren Buffett subscribes to as well. With so many investors losing money in tech stocks they know little about, maybe it's time to follow this advice. One category everyone should be familiar with is household products. And financial pros have been eyeing Procter Gamble, making it their most searched stock in the household products category on Trackstar, our proprietary stock search database, over the last month. It's a staple of many portfolios, with institutions owning 65% of shares and the public owning the remainder. The company is a go-to for its consistent revenue generation and reliable business, so should you add it to your portfolio? Procter Gamble, or P&G, is the largest company in the household products industry, with a market cap north of $320 billion. P&G has grown revenue consistently since 2018. They went from $66.8 billion in 2018 to $80.1 billion in 2022. And during the same period, management raised the stock's dividend from $2.78 to $3.52 a share annually. The company has an operating cash flow of $16.1 billion. However, it has total cash of $6.7 billion and total debt of $33 billion. The firm's current ratio of 0.6x could be better, but it's not unusual for a company of this size. Plus, P&G generates over $16 billion in cash from operations and more than $10 billion when you exclude capital expenditure. And P&G has a PE gap ratio of 23.23x, which aligns with its 5-year average of 24x and is comparable to most of its peers. The company trades at a relatively high price-to-sales ratio of 4.02x, but every other competitor is in a better position. And P&G doesn't beat many with its 19.79x price-to-cash flow ratio, but it beats all of its peers with a stunning gross profit margin of 47.23%, an EBITDA margin of 26.55%, and a net income margin of 18.11%. P&G had positive revenue growth of 4.31% year over year, and we especially like its 5-year average revenue growth of 4.3%. In our opinion, this is a 7 out of 10 ranking stock, and this was a tough one. While P&G is a great company with a long history, it's relatively expensive, and for companies like P&G that don't grow more than single digits, price really matters. The stock isn't overly expensive at $133 per share, but we prefer to start a position around $120 a share or lower.